Welcome back to this edition of Future You. We have two really interesting topics to talk about today. One is the market, and the other we're going to talk about being a small business owner or self-employed and types of loan programs you can get to make the home buying experience so much more pleasant. So with me today is Andy Fulton. Andy, thanks so much for joining us today.
Very glad to be here.
Let's first start, Andy, and talk about what you're seeing even in just the last week over the holiday. What's going on in the market?
Yeah, thank you, Andrea. It's been a lot of movement in the market in the last few weeks. We just come off the 4th of July holiday, and one of the first things I'll point out is the strength in the mortgage purchase applications index. This is measuring the number of purchase applications that are started week over week. You can see that this graph here is specifically comparing 2025 to 2024. And specifically, you can see the 2025 line is way above the 2024 line right now. We're up about 20% year over year in the number of purchase applications that are being originated week over week. And typically, if you look below, you can start to see a drop off right around this time because of the 4th of July holiday. We stayed pretty steady these last couple of weeks, which is a sign it may stay steady for the weeks to come. In addition, we're watching total pending home sales. Now, this is a national view, right? You're looking at quite a few squiggly lines on here on the chart. But what it's basically showing you at a national level, we have pretty strong pending home sales in 2025 compared to the last couple of years. 2022 is the last time we saw more pending home sales than we do right now. And a lot of that is attributed to the rate changes that have happened in the last couple of years. But just look at a year over year change from 2025 to 2024. We're up about 15,000 total pending home sales right this moment compared to last year. So the market's performing a little bit better than it did last year. And that has a little bit to do with rates being a little bit better right now compared to this time last year. Let's also talk about home inventory, right? The number of homes that are currently available for sale on MLS listings. Today's inventory is up it's up a little bit more than 200,000 total homes available for sale in the market right now. That's a 31% increase year over year, but you can still see we haven't quite got back to the inventory in the market that we experienced right before the pandemic in 2019. There's still about 200,000 homes or 180,000 homes less available today, back in a more healthy market prior to the pandemic. So we've probably still got a ways to go before we get back to a normal when it comes to inventory. What the increase in inventory is creating, though, is it's creating price cuts, right? We're still seeing home sellers starting at a certain listing amount, and they're having to drop the price on their home that's listed at least once, almost 41% of the time. You can see the chart and the trending happening right now. Price cuts are starting to increase, and that's happened for the last few years as well. This is a pretty normal business cycle for price cuts. But if you just look at the same time last year, we're up about 2.5%. More homes experiencing price cuts today, and that's because of
And what's interesting about that, Andy, is based on what you talked about last week, seller concessions are such a hot topic. So it's just a reminder to all of our viewers, seller concessions is always another option versus lowering the price of the property.
Yeah, I would highly recommend, if you're a listing agent, you're working with people looking to sell their home and they've got a lot of anxiety to get it to move faster, instead of cutting the price of the home, really start marketing seller concessions to potential home buyers. Loan officers can help you market them. We can get yard signs out there for you. But offering a home buyer maybe 1% or 2% seller concession and keeping the price of your home where it's at could move that house a little bit quicker, because the gain for a home buyer through an interest rate reduction, if they use your seller concession to buy their interest rate down, they could potentially buy the interest rate down more than 0.5% right now and save a lot more money in the long term in owning that home through a lower interest rate than just having a small price reduction.
Yep. Awesome. Thanks. That's some really awesome information, Andy. Thank you so much. So next topic I'd love to pick your brain about a little bit is for those that are either viewers or that are going to be watching this after their friends share it. Give me some information about being a self-employed borrower. The myth out there is it's a terrifying experience. You have to share every piece of paperwork, including your blood type. So tell me a little bit about why people feel that way and what types of programs we offer to help.
Yeah, it can be a bit frustrating trying to obtain a residential mortgage as a business owner, because your income is scrutinized at a much higher level during that process than, let's say, if you were a W-2 employee of a company. Let's talk about the scope first. There's 27 million people in the United States that filled out a self-employment tax return for 2023. And the general population of the United States, people that are eligible to own homes, adults, about 65% of those eligible people in the United States are actual homeowners. That is a much lower number for business owners. There's only about 55% of eligible business owners that are homeowners right now because of that frustration, because of that extra scrutiny of your income. But there's two good pieces of news about this. One, the Fannie Mae and Freddie Mac. Fannie Mae and Freddie Mac really set the market. They invest in about 80% of the mortgages that are originated in the United States. They've lowered their requirements for business owners that have owned their business or businesses for 5 years or longer. If you haven't owned your business for that long, you're typically going to be evaluated on your last 2 years personal and business tax returns, and they're going to evaluate your net income with some add backs of depreciation, but their starting point is your net income, not your gross income. And that's, evaluation of 2 years tax returns. For some business owners, that's good. For others, it's not. Right now, if let's say you filed your 2024 tax returns already from last year, and you had a good year in 2024, this will benefit you, right? They're not going to bring in an average of 2023 and 2024. They're just going to look at your 2024 tax returns plus a year-to-date P&L just to evaluate whether your income's continuing at the track that it was last year. But if that's not a solution for you, the big solution are bank statement programs. These are new mortgage programs that have probably been around sometime in the last 10 years is when they really started to come back into the market. And they are specifically designed for business owners to make the mortgage process and approval process easier for you. What bank statement mortgage programs do is they no longer evaluate your income through your personal and business tax returns. They evaluate your income through your cash flow within your business bank accounts. Typically speaking, a bank statement program will evaluate your last 12 months of business bank statements, and they'll look at what's the standard deposits of cash flow that's going into these accounts for business. And they'll give you a ratio of that. Yeah, I think the standard ratio is 50%. So whatever 50% of your last 12 months average of deposits into your business bank accounts will be the income they use to qualify you for the mortgage process. Everything else is the same. Appraisals, debt to income ratios, pretty much all the same. It's just the way in which they're evaluating your income. And these bank statement programs are fantastic tools. They're not conventional loans. They're not invested by Fannie or Freddie, but the interest rates that you can obtain on bank statement programs are very close to conventional interest rates available in the market right now.
I love it. It's such interesting information. And I personally am not a business owner, but I know a lot of business owners and often hear of them just saying it's going to be a headache. I don't even know if I want to do it. So you've got a friend in us, that's for sure. So please reach out. If you are not a business owner, share this with a friend who is, and we are more than happy to help them on their home buying journey. Andy, thank you so much for this information.
Yeah, thank you. And just the last point I'll make on business owners is those bank statement programs, they may not be available everywhere. If you're talking to your bank or your credit union or maybe a retail lender, if they say no, they don't have access to these bank statement programs, talk to a mortgage broker. We have access to many of these programs that have all kinds of little nuances that could benefit one business owner over another. So we know how to navigate this market.
Awesome. Thanks so much, Andy. Please feel free to share this with friends, like and subscribe to us to get all of our future updates. Thanks so much. Have a great week. See you next week.